If you're listening to this, there's a good chance you work within the real estate investing industry. There's another good chance that you would like to increase the sales of your products or services. Well, you're in the right place. United States Real Estate Investor is a platform you need to place your brand directly in front of your target audience. With our focused, growing audience of real estate investing beginners, enthusiasts, and seasoned professionals, you can continually reach our captivated viewers and listeners with ease. To learn more or to get started today, just visit UnitedStatesRealEstateInvestor.com/advertising. That's UnitedStatesRealEstateInvestor.com/advertising. Get ready to increase your brand awareness and your bottom line. Attract clients with content.
Even though investing in yourself has proven to be the best strategy for building wealth for you and your family, it's not always so easy to find your tribe along your personal journey. In the world of business, it can sometimes feel daunting to seemingly always be in the good old boys club, where you may or may not be taken seriously. Well, now, real estate investing isn't just for the guys anymore. With real conversations about strategy, business relationships, actionable steps, financial goals, and more, you've just found your tribe. Welcome to United States Women in Real Estate Investing.
Hey, welcome to This Month in Real Estate Investing, everybody. In this episode, we'll be covering a variety of news items, including Public Storage makes $11 billion hostile bid for Life Storage. New CRE tech platform aims to be a dating service for 1031 exchange deals. And meet the platform fundamentally changing how we think about real estate investing. Okay, I'm your host, James Brown, and I help fellow investors reach their passive income goals through our hybrid investing model, as well as other traditional types of investing. Reach out if you want to learn more. If you're watching live, feel free to comment and ask questions. Today, our guests are Dohn Thornton, Kim Kesterke, and Brad Chandler. Why don't you each introduce yourselves in that order, with your background and what types of investing you focus on?
My name is Dohn Thornton, like you said. I'm known as Don the short sale guy. I've been doing short sales almost exclusively since 2002. Done well over 3,000 short sales flips in that period of time. And, still here, more gray hair, but I'm still doing short sales.
That is a lot of short sales. Awesome. Kim? Oh, you're muted.
Thank you. So my name is Kimberly Kesterke, and I started real estate investing about 17 years ago, back in 2006. And I started out with more of the long-term buy and hold strategy. And I would say about 3 years ago, I really started focusing my efforts on more creative financing, doing rent to own, land installment contracts, contract for deed, and doing more holding that way, more as the bank. So I started a community on Facebook. We're called the W2 Investors, and I've got a brand, W2 Landlord, that kind of helps with that, and just really excited to be here today.
Awesome.
Brad Chandler. I own two companies. Back in ninth grade, I read a book on how to buy real estate with no money down. And in 2003, I bought my first house. And I guess 20 years later now, I've bought and sold 4,000 houses all across the United States, but mostly in the DMV area, DC, Maryland, and Virginia. And a couple of years ago, I went through a major life transformation. And now I spend most of my time focused on bradchandler.com, where I help entrepreneurs find more happiness in their lives.
Fantastic. Glad to have you here, all of you. Well, let's get into it. The first news articles from the Denver Post, right where I live. With home sales falling in Colorado, real estate agents will have to fight over a shrinking pie. During the pandemic, thousands of people in Colorado lost or left their jobs and got licensed with the common misperception that being a real estate agent was easy money. But with the high interest rates, sales have fallen by a fifth and are expected to slow even more, reducing the number of agents needed. There are already about 1,000 realtors that have dropped out, at least as being realtors, which is another designation, another layer above being an agent with extra ethics, training and stuff involved. But they were tracking how many people were realtors, and 1,000 have dropped out already just recently. And let's see, most new agents don't last more than 5 years, and the change in this market is going to make it even more difficult for them to hang on. Well, this is interesting. 95% of commission income for agents goes to the top 5% of agents. There are a lot of agents that don't do many deals or have enough to make a living wage. Companies like Redfin, a quarter of its agent employees, their agents are actually employees, cut a quarter of them. And Compass has had 4 rounds of layoffs since June. Now, I know Kim and I are both licensed realtors.
Oh my!
And you are too, Doug? And
yeah,
Doug, you were too. Okay, cool. Then we'll have something to share about this. Anyone want to jump in?
I mean, look, we could talk about this for days, right? I was on a mastermind I'm a part of earlier today, and this guy who's a lender, one of the largest lenders for the investor community in the United States, he does thousands of transactions a year. He did this amazing presentation on interest rates, and he took them from Fannie Mae interest rates over like the last 60 years. And you hear the buzz now about, well, let's get into a 5-1 ARM or 3-1 ARM, because when the rates come back to normal, I'll refinance, right? Well, do you know what the normal interest rate is over the last like 60 years? It's closer to like 8%. And for the last 40 years, it's been going down. Charlie Munger, who is partners with
Warren Buffett.
Warren Buffett, thank you. I've got Berkshire Hathaway in my head. I was about to say Mr. Berkshire Hathaway. He's basically said that I think that the trend after 40 years is going to turn and it's going to go back up. So what I was, for the last 6, 8 months, 9 months, as interest rates have gone up, I kind of predicted like volume is going to, I don't know what's going to happen with prices, but I know one thing, volume is going to go way down, and volume has gone way down. And even for us, volume has gone way down in the flipping business. And we spend a fortune marketing. I think what will eventually happen, and I don't know if this is 2 months or 2 years from now, is people are going to understand that interest rates aren't going back to normal. If they go back to normal, they're going to go up, right? And I think people are going to, right now, there's so many people that have a 2 or 3% interest rate that aren't moving, because where are they going to go? They're going to double their monthly payment, right? But I think if interest rates continue to stay, people are going to be like, all right, well, I guess I have to sell now, or I'm gonna decide to make that move. And I think we're going to see the normal trend of transactions come back. I just don't know if that's 2 months or 2 years from now.
Yeah, we're definitely seeing a huge shift. Well, maybe not huge, not like 2008, right? They're not predicting that kind of drastic shift, but
you mean shift in what?
Just well, both in,
or you could swing a dead cat on every street and get 5 foreclosure vacant houses. Yeah,
right, yeah,
that's what you're thinking, right?
Yeah, exactly. Thanks, Don. Thanks for bailing me out.
I was thinking you might talk about prices. I mean, that's a whole nother topic. Like in the DC market, in the San Diego market, because I have friends there, it's back to the craziness. It's back to people making multiple offers. It's back to bidding over the price. And if you'd asked me 3 months ago, would that have happened in February? I'd have been like, there's zero chance. But I was wrong, because it's insane.
Yeah, I see that too. I'm in more of the Atlanta market as well. And I just really think that we're going to start seeing it's a function of the interest rate versus purchase price. So, I came across a really interesting statistic that, back when things were really crazy last spring, there were people going in doing $50,000, $100,000 over the purchase price. And with the lower interest rate, when you brought it all down, and looking at, what our average here in Atlanta is between, 350 to 400,000, and you were getting a certain end level payment each month. Even with the interest rates going up, what we're seeing is it's not so much that the market's slowing down, but we're seeing that those 50,000, 100,000 over asking price isn't landing as frequently as it was back then. Actually, more sellers are open to actually either selling at the purchase price or a little bit below. And that end monthly payment is still the same. So I think what we're going to start seeing is people are going to want a certain monthly payment, and the market is just going to have to fit into that. Eventually, we're not quite there yet, but I think we're going to start seeing that.
Yep. And what do you guys think about the topic of the news about agents having to bail or stick around?
I call that every time, every year. That's what I mean. That's the way. That's the nature of the beast. You're talking about a very competitive market. You're talking about people that, you're right, have a lot of them have pipe dreams that somehow getting a license means that they're going to be able to start making huge amounts of money in real estate. Any kind of competitive, especially commission-based environment, you're always going to have the top 10 get most of the money, and the rest are just going to get crumbs. So, I mean, that's just the way real estate's been as long as I've been there, which has been almost 25 years now. So, no surprise there for me.
Yeah, I know. Like in Colorado, we've got 44,000 agents, 29,000 are realtors. That is a lot of agents for Colorado for the amount of deals that can go around. And I think it's the percentage is like 5 deals per person versus, I think nationally it's 6. But if that's all you're doing, that's not a lot to go around.
Yeah, I think the average realtor in America sells 2 houses a year.
Yeah.
So, and if you look at the volume is because interest rates have gone up, and people in those 3% mortgages don't want to go and get a 5 or 6% mortgage. They're just sitting there. They're like, we're going to wait. We're going to wait until the mortgages again come back to normal. But if they wait to go normal, it's going to go up. So I think people, in the next 10 years, there's no one's going to argue that we have a shortage of houses in the next 10 years. So no matter what interest rates are now, I think it's Warren Buffett who says that the 30-year mortgage is one of the greatest investment vehicles ever, right? Because you've got a floor, what's going to happen. If interest rates go down, you refinance. If they go up, you're in a great position right now, or forever, for 30 years at least. So I think that waiting to buy, someone once said the greatest time to buy real estate was 30 years ago. The second best time is today or yesterday. I still think that I'm looking at, I divested most of my stuff over the last couple of years, and I'm actually thinking about starting to buy again because prices aren't going to go down. 10 years from now, when we have this conversation, I promise you, any house you bought today is not going to be lower than it is 10 years from now.
Yep. Just keeps going.
Yeah, I definitely agree on that too. And just on more of the agent conversation, I just think anybody can be successful anywhere. So like you said, that 95% or 90% of the commissions go to the top 5%, go be the top 5%. And if it's not for you, then just go, pivot, do something different. I think a lot of people get into real estate as an agent because they think it's fast money. They think it's easy money. And I think because the barrier to entry is extremely low. I mean, you do have to get a certification test. You do have to pay certain fees. But when you compare it to a college education or some of the barriers to entry in other industries, real estate is very accessible. So I just think, if these agents are willing to hustle, they can be in that top 5% collecting 95% of those commissions. Or if they want to get into real estate investing, that's honestly where I made, a lot, like 90% of my money is in more of the real estate investing, but I'm an agent as well to just start helping people, invest better and helping people buy better.
Yeah. Well, hey, let's jump into the next article from Reuters. I used to call it Reuters, but I guess it's Reuters. Public Storage makes $11 billion hostile bid for Life Storage. They've been throwing lowball offers at Life Storage since January, apparently. And initially they were told to pound sand, but they might be reconsidering as time's kind of gone by, and the self-storage, it was really booming and it was super hot during COVID, and now it's starting to cool. So considering the shift in the market and headlines like this, other REITs like Blackstone and Brookfield may jump in with more acceptable offers to Life Storage as well. So how do you guys think this takeover of this size is going to affect the self-storage industry and affect smaller investing groups? Because I know there are other, like, more mom and pop type investor groups out there.
I'm just fascinated by the whole, not just about this in general, but it's always a trend. And, the people that get hurt are the ones that start buying too late in the trend, and the question is the trend, is it spiked and now it's starting, there's always a correction, and so you have to determine, is this correction going to go down longer, or is it going to stabilize at a certain price point? I don't know. In my investing, my investing strategy has always been to, if it's not low hanging fruit, and if I can't in a short sale create the low hanging fruit, the equity that I need, then I won't invest. And maybe I missed out on some profit that way, but I never gotten hurt. So that's been my investment philosophy. I don't invest in these types of investment vehicles, so I don't know. But just my general view on how to respond to these types of articles and these kinds of things that happen. And I know, going back to the previous thing, I would never spend $50,000 more than the list price. I'd rent before I did that. Maybe I'm stupid, but that I would not do that as a general rule.
Yeah, that's been insane how they've been overpaying. I was on the listing side on a bunch, and I'm like, can you afford this? Like, these appraisal gaps, and it got crazy. And I remember one where they were just bidding way over. I'm like, okay, I need to talk to your lender, see if there's any possibility of you getting close to this appraisal gap. So yeah. So self-storage, do any of you guys have experience with that? Have you invested in it, put deals together?
No, I haven't.
Oh, you're muted, Brad.
I do have a good friend of mine who owns a ton of self-storage, and it has exploded over the last 5, 6, 7 years. And it always just makes me think, like, how can so many new places be created and built and develop, these self-storage places? And at some point the music's going to stop, right? Your original question was, how's it going to affect the small guy? The bigger they are, usually the more economies of scale they can be. They can price gouge. They can do specials that are going to hurt the little guy. So it's definitely, I don't think it's a good thing for the little guy. But you know what? Maybe they can't. Maybe their cultures are going to clash, and they're going to end up going bankrupt. It's just, who knows? I know that the economy is probably way worse than the feds are making it out to be, and I think it's getting worse by the day. So, that usually is a good thing for self-storage, because people end up consolidating and moving in together, and they need somewhere to place their items. So who knows? It's a interesting world that we live in today.
Yeah. Yeah. It's interesting. It was probably 4 years ago. I saw a presentation by a gal that was in self-storage, and a little follow-up about a year after that, I heard that, that her group had gotten into some hot water. Things weren't working out with self-storage while everything else seemed to be booming. Everything I was hearing was self-storage is just rocking. So I was kind of interested to see that, but they were also a smaller operator compared to public storage, that, like you said, has these economies of scale. And I know a lot of those, it's like multifamily syndication, right? They go in and they find a mom and pop storage facility, maybe add some tech and processes behind the scenes to make things more efficient and add value. And that's where those big companies probably have that really dialed down, able to come in and turn things around super quick and make them more profitable.
I did back in another life. I worked for a residential REIT called Avalon Bay, one of the top REITs in the country, kind of like the Nordstrom of property management. And in graduate school, I got an MBA in real estate. And one of my professors had done a paper on that the economies of scale that you think that these big companies get, they actually don't, because when you add up all the middle level managers and all the travel and the plane trips and the hotels and everything, all the support, that it really is not the economies of scale that you think they would get. So just another interesting viewpoint on when these huge companies come together. If they're not efficiently efficiently run, they could be not very efficient and actually hurting themselves.
Yeah, I guess I've seen that in corporations too. They get bloated.
Yeah, one of the things I picked up from this article that I really thought was interesting was that the big thing here is that, how is it going to affect the mom and pops? And I honestly think it's a good thing for the mom and pops, because especially if, there's only enough self-storage out there, it's a good time for them to cash in, and they could probably get a pretty good price for it. But another thing that I thought was pretty interesting is, as more of the commercial space in the United States is shrinking, I think that it gives a really good opportunity for self-storage to start occupying those spaces. I know that these big companies are building it from the ground up, but even in this article, it mentioned that the cities and metro areas that do have these self-storage, they're occupying more retail space. They're, really supporting the economy in, a lot of different ways. So I think that there could be a pretty cool, if, we're talking about pivoting or for mom and pops, I think that, mom and pop commercial people, like, this could be good, or mom and pop self-storage, it could be good as these companies start buying more.
Yep. Cool. Anybody else have comments? John?
Oh.
All right, let's go to the next news item. Okay, from marketplace.com, for home stagers, it's hard to put a pretty face on the real estate downturn. As the housing market slows down, people in every part of the business are feeling it, including stagers. It's well documented that staging is worth the money because it attracts buyers to the home through photos and then helps them imagine what the home would look like with their furnishings. But some sellers are more strapped now, and staging isn't cheap. It's typically around 1% of the list price. With homes sitting on the market longer and furnishings actually being rented for a time period, it can add up to even more. I was going to comment, so I'm a true believer in staging. When I first got in the business, I wasn't doing staging. And once I started doing it, I saw the actual real life results for my sellers, just getting them more money than they would, even considering that amount they had to pay, which in the article they were talking about the seller paying it, which they can either pay it directly, or I usually just charge a commission that has enough in there to cover it. I pay it directly to the stager. Either way, the seller's paying for it, but it is worth it in my opinion. And so for you guys, are any of you selling rentals or flips currently? And if so, have you staged when you were selling those properties?
So staging for us has a lot to do with what the market's doing, right? So for many, many years in these mostly the last, 8 years, we didn't have to because the market didn't require it, right? Last year, late last year, things really started to turn for us. So guess what we started to do? We started staging again. We started doing the landscape packages because when someone drives by, you want it to be the prettiest home on the block, right? We didn't have to do these things when houses were flying off the shelves. But the last 3 months, we started staging again for the first time in I don't know how many years, 5, 6, 7, 8 years, something like that. And now the market literally in the last 30 days has shifted again where there's multiple offers and bidding up prices. So we're not going to put the money on staging because there's hardly any houses out there. And if you price it right and it looks okay, you don't need to stage. So that's my opinion on staging. Now, could you make the argument that you should stage everything all the time because it might sell for a little bit more? Perhaps. I guess you could, but who knows if that's the case?
That's my feeling. The time is condensed. They're flying off the shelves, day or two, and you got offers on the table. But yeah, I think the principles of staging will bring that price up even higher. If it's a like kind property, right? If yours is staged and another one isn't, they're both getting offers, but you might get that higher price. So that's my feeling. How about Kim, Don? Oh, muted.
Thank you. Every time I've staged, I've gotten more money, or I've rented it faster or sold it faster. That's just been my experience. Now, I haven't staged everything, but just looking at my experience of when I have versus when I haven't, it's been a good thing.
Yeah, and worth. You got more money, even considering the cost of it.
Mm-hmm. Yeah.
Well, I've got a unique perspective on this because I'm a foreclosure guy. So, I mean, I'm a foreclosure short sale guy. So I'm not, I'd say 80% of mine are short sales. Whatever's left is a subject to deal. And our version of staging is what we politely call putting lipstick on a pig. So, which means basically cleaning out the trash, doing a quick, mop and wiping down the counters. And yes, it makes a huge difference. Even in those kind of, poop holes as you sometimes get. So, I mean, the principle is great. I mean, I think it just comes back down to like anything else. You crunch your numbers, I mean, what's your investment and how much can you reasonably expect to, get more on your sales price, and just, is it worth the hassle, and if you're going to get extra $5,000, $6,000, $7,000 net, then yeah, if it's $1,000, a couple thousand, then maybe you don't want to do it, so, I mean, that's always it's always the numbers, people get caught up in, prices, right? I used to do the same thing. That's one of the reasons why I stopped doing fix and flips, because I crunched my numbers and realized that the more intricate fix and flip I did, I wasn't profiting that much more than if I just cleaned the thing up and sold it, and so all it matters is the profit, and also just time. How much money you got tied up in a project? So for me, I just said, screw that. I'm going to put lipstick on a pig and move it. Especially like you said, if the market's moving in your areas, and it's all regional. I say this is the biggest difference that I've seen so far in this environment. I came of age in the early 2000s when it was really hot as well. And of course, we all know what happened after that, when all down, right? But I mean, now it's like Florida, we've been seeing substantial decreases in sales prices, and we've seen houses staying on the market longer, but yet, like you said, out west, San Diego, it's booming again, or maybe Atlanta's the same way. So it's all regional now. You have to react to where you're at and where your investing is. But here, I mean, it's slowing down, and so John,
where in Florida are you seeing the price declines?
We're seeing it in. I put it this way, I have. I don't know, at any given time, 20 to 30 of my short sales are out there, and we're having to substantially lower our prices. We've seen, 15, 20, sometimes 30% we've had to lower.
What areas?
All over the state. And we have them all over the state. I mean, it's been, we have them from Pensacola down south, southwest, in Central Florida and Jacksonville. And we have seen we've had to lower the prices. And what's interesting is because of the short sale, the bank kind of controls when you lower and how much you lower it. And they're finally realizing that, at least in our market, they've been allowing us to lower the price to get action on the property. So
that's interesting, because I'd heard that the east coast of Florida, kind of like the Miami, kind of Fort Lauderdale, Boca areas, we're seeing those declines. But I talked to friends recently who are investors in Sarasota, kind of down in Naples, and they're like, there are no price declines at all happening here. So
I'm a short sales guy, right? So maybe it's a function of the fact that nobody wants to go after the short sales. I totally agree with that. But I'm just saying, from my experience, we've seen some significant price drops.
I would expect that because the people, the experts, the so-called experts, were forecasting like 6 months ago what markets would take the tank, the biggest, and Florida was one of them. But it doesn't seem like because around the DC area in late 2022, we saw some houses that we underwrote earlier in the year sell for 6%, 8%, 9% less than what we had underwrote them for 6 months ago. So I was thinking Florida is going to have that same fate, but I don't know. I mean, there's so many people moving to Florida that the supply demand thing might keep those prices high.
True. I don't know. I mean, I've not been able to get a feel for this market in the last 3 years. You think something's going to happen, and it goes the other way. I don't know. I mean, it's baffling.
It really is. I agree. It's the same thing going on here. I cannot believe what's going on in this market right now.
Well, thanks, guys. Let's jump into one of our sponsors.
Hey, it's me, Antonio Holman, founder of United States Real Estate Investor and producer of This Month in Real Estate Investing. Are you ready to ignite your financial freedom with what has been called the hottest REI strategy around, or should I say strategies? Enter Jason Palliser's 2-day investment blueprint, where you will learn the secrets that the real estate investing community doesn't know because they never had a reason to before. With Jason's 2-day investment blueprint, you will learn how to tackle real estate deals with over 40 different strategies, which means your chances of losing another deal nearly disappears completely. In Jason's 2-day life transformation intensive, you will learn how to generate more deals, close deals faster, win more deals over other investors, multiply your real estate deal strategies, and much more. Jason's 2-day investment blueprint can help you grow your REI business to 6 and 7 figures faster with much less aggravation. If you want to learn how to invest in any market in the United States, even the tough markets, and close multiple deals per month, visit 2dayblueprint.com. That's the number 2dayblueprint.com. And make sure you tell them you heard it here on This Month in Real Estate Investing. Don't believe the no more good deals hype and visit 2dayblueprint.com today. Now, back to James with This Month in Real Estate Investing.
All right, let's get to our next news item. From Wealth Management, new CRE tech platform aims to be a dating service for 1031 exchange deals. Without digging too much into the details of this, and there were a lot, the platform is designed to connect must-buy investors with sellers, as well as lenders. It's seizing on an opportunity for more than 70,000 1031 exchange investors, acquiring $400 billion in commercial real estate a year. It's designed like a dating site where sellers are matched with a must-buy investor or multiple must-buy investors. Sellers are able to see the amount of equity a buyer has to reinvest and the number of days until their selection deadline. The seller decides who they want to send their listings to, and the buyer decides if they like the property and whether they want to reach out to the seller for more information, a walkthrough, or issue an actual letter of intent. There's a lot we could dig into here. And Don, I know that you and my business partner, Toby Hansen, what you guys do for investors in regards to 1031s. And I'd like to hear what you think. But let's dig into this a little bit before you guys jump in. So first, for our new investors tuning in, do any of our guests want to explain what a 1031 is, just briefly, along with the benefits and the downsides? If not, I'm happy to.
I can jump in. I mean, it's really simple. I mean, you have you are allowed by the IRS when you sell an investment property. You have, I think it's like 45 days to get it, to identify a property. You have 6 months to close on it. And the idea is that you can defer your capital gains by immediately putting that profit into another property. Of course, it's fraught with challenges. Let's put it that way. The fact that it's sometimes, especially in the last 3 years, it's hard to find a similar property in that time frame. And if you don't find a similar property, if it's off by square footage or price point or year built or whatever, there's a whole myriad of things. If it doesn't match up, then it's called the boot. You get taxed on that overage, and that's one of the that's kind of they were the best show in town for a long time. And we can talk about why there's better strategies than that now, but they're still used widely.
Yeah. Just recently, I was talking to a seller trying to sell a property, a second home, I believe, up in the mountains here in Colorado. And excuse me, he's like, I keep getting all these lowball offers. And he's like, I don't understand what's going on. And I go in the MLS, and his listing agent had put, this seller has a 1031 exchange, basically throwing up big red flags, saying, hey, this guy's under the gun. He's going to have to take a lowball offer. When he found that out, he was just lost his mind. And what's funny is he was also an agent, just in another state. He probably could have looked that information up, but he turned around, got his license in Colorado, I believe, and listed it himself. And I'm sure he wasn't putting that info in the private remarks. But yeah, I bring that up because in this platform, I'm trying to get my head around, a buyer's or seller, they both are kind of on the same page as far as, they know clock's ticking for this person that's got to sell and then buy, right? So I don't know, what are your thoughts on that?
I personally really like it. Last year I had to do 2, and there really is a crunch. And I'm happy with the 2 properties that I exchanged into. No issues there, but I have to believe that if I had a little bit longer or maybe a wider variety of things to choose from, maybe I would have chosen differently. So it seems to me that this is a good way to at least vet some options and continue looking, in your market in the traditional ways, but this is another good way to see if there's more there as well.
Yeah. I guess what one of the big points they were making is that you've got this platform, you've got off-market, on-market options, and they're speeding up that process of being able to identify your next property quickly without a delay that's going to potentially cost you a lot of money.
Well, I'm going to jump in and say I think 1031 exchanges are obsolete and should never be used again. I mean, I have a non-grantor, irrevocable, complex discretionary spendthrift trust. So when I have an investment property, it goes into my trust. I'm the trustee, and then when I sell it, my trust sells it, and it comes back in, and there's no capital gains taxes at all. They're eliminated with this trust, that strategy. So I personally, I feel a little bit, I don't want to say contempt, but it's just like, why are you continuing to do something that's so obsolete when there's another way to do it where you don't pay any capital gains taxes ever? They're eliminated, and you can put that money. You're not forced to have this tight window to put your money to something. Maybe you don't want those properties, but you're forced to by a 1031 exchange because you're on this time crunch. If it's a trust asset and you sell it with this trust, as this trust, then that money comes back in. Wait for a better investment. You decide what you want. There's no time crunch, and that money that would have gone to the IRS, or you would have put back into a property that, again, maybe you don't want that. You can do whatever you want with it. So it takes away all the stress and because I mean, all you're doing is deferring the capital gains. Eventually, sometimes it's going to get paid. With this, done. Not to worry about it.
Yeah, it's such a beautiful thing.
Yeah.
When I heard about what you guys were doing, I was like, oh, like, why would you ever do that again? Well, one caveat to that is you could do a reverse 1031, right? But it's going to cost you, what, 5 times as much or something as a regular 1031.
Yeah.
Why do that? Just
exactly
do the trust and not ever have to do that again. Especially if you're doing multiple 1031s, that pays for itself in probably the first deal, right?
I'm helping a investor right now. He's closing on his sale of 4 industrial properties. They were talking about, he's going to pay a cool $1 million at least in capital gains taxes. And so what we did was, okay, cool. We got him a trust, helped him get everything, get the deeds over to the trust, get the bill of sale, all that stuff done. We got it done in like 3 days. And so now, and of course he had to get an addendum with the buyer. To make sure everything's, to change the name of the seller to whatever his company was to the trust. And that's it. It was that simple. And, he was just laughing saying, my gosh, I had, no idea it was this simple and so effective. And it's like, yeah, that's why I think that as word gets around about this trust in the next 3, 4, 5 years, I don't think you're going to see people doing 1031 exchanges. It's certainly not the volume they're doing right now. And the other stuff, deferred sales trust, accelerated depreciation, all those things are out there. They don't eliminate. And when people realize this eliminates capital gains tax, then why would any normal person do that? So.
Yeah. And what was it, 2 years ago, 1031s were on the chopping block. They were going to vote them out, right?
Yeah, that was on the table. It didn't survive, but they were at the very minimum. They wanted to raise the. They want to get more of the money and make it less available.
Attractive. Yeah.
Attractive. That's what I was looking for. Yeah.
So in this article, they're talking about more 1031s in the commercial real estate, not necessarily residential. Maybe it would all work the same. With your trusts, Don, would that apply to a big commercial?
Any asset, any capital asset that you sell. It could be commercial, it could be investment property that's it's a single family, it could be a duplex, whatever. Industrial property, commercial property, it could be crypto, it could be a business. Businesses are getting killed on capital gains taxes when they sell. Mm-hmm. And we're doing that right now, where you just do an asset sale. We have something like 200 private dentists are selling their practices to private equity firms, and they're setting up the trust before they do that to avoid the capital gains. So yeah, any kind of a sale which is going to be a capital gains event triggered, no matter what the asset, this trust can handle.
Yeah, that reminds me that Toby was talking with a chiropractor that wanted to sell his practice. Same thing.
Yeah, absolutely. Same way.
Yeah. All right. Any other comments before we jump into the next one? All right. Back to self-storage. A private equity real estate investor bets big on self-storage. Prime Group Holdings has been focused on self-storage with the largest ever fundraise of $2.5 billion. They and their investors see it as an asset class that is recession resilient, need-based, offers reliable cash flow with little downside, and have multiple ways of adding value after acquiring the property. They're focused on finding off-market properties as much as possible in undersupplied markets and aim to streamline operations to increase efficiency and cash flow. Even though rents are down 2.8% compared to the previous year, they're still higher than before the pandemic. Also, the number of properties under construction is declining due to development costs and delays, as we all know, due to supply. So I'm well aware of the benefits of self-storage, and many other investors are too. They're doing everything they can to find good off-market opportunities. What do you think of this asset class and the opportunities for smaller investors that don't have $2.5 billion behind them? Similar questions as to our previous article, I guess. Do you have thoughts on that?
I mean, I think you got to know what you're doing, right? I don't have a lot to add here other than I've got a number of friends that are in the single family space that are starting to look at and buy self-storage stuff. And I learned the hard way back in 2005 when I thought flipping houses meant I could develop houses and develop buildings. And we bought 3 houses within like 3 months in the summer 2005 that were all development deals. We had no idea what we were doing, and we ended up losing $3 million on those. And one of them took us 10 years to extricate ourselves from. So I don't have a great answer other than to say that the small investor better know what self-storage is like, because it's not like flipping a house or running an apartment. It's just a different beast.
True that.
Yeah, I think what I pulled out of that article is, who's in the fund itself. And so, when they talked about its pensions, its university endowments, and, some of these insurance companies even, to me, it was a signal that there is longevity in self-storage. So just piggybacking off of what Brad said, I think education is key in terms of getting into it. But just with the decrease in demand of commercial buildings, or I guess increase of vacant commercial buildings, maybe there's an opportunity there. I don't know. I mean, it would require a lot of education, that's speculation, but it sounds like, these long-term asset classes are putting a lot of stake into self-storage. So it's definitely worth looking at.
Yep. All right. Any other comments? All right, let's go to the next article from Wealth Management. Delaware Statutory Trust, DSTs, sector battles excess inventory as investor demand slows. This is a space I'm not super familiar with. A sharp drop in demand has caused headaches for sponsors holding properties longer than planned. One of the selling points of DSTs is that they are often prepackaged deals for time-sensitive 1031 exchange investors. From my understanding, DSTs are available as fractional ownership interest, so an investor can buy into one with as much equity as they need to exchange instead of having to find a single property of equal or greater value. According to the article, things have slowed down with higher rates and friction between buyers and sellers on pricing. What do you guys think about DSTs and the appeal of them as a more passive investment, especially for baby boomer investors?
Well, in case you're maybe less educated viewers don't understand what it is, basically a DST is also a vehicle to defer capital gains. And what if you are a owner of a property, you sell it, and you've got to put that money somewhere, and this is probably not a bad solution if you don't do the trust like we talked about, as you can put it into in this syndication type situation, and it gives you, it takes away it doesn't take away your capital gains, but you pay it incrementally. So in other words, you're not going to get hit with it right away. You're still going to pay it, but you can take your profit in increments, which means you can pay it off, you can chunk it, but you're not going to pay it lump sum right away. It's convenient, right? What's the biggest thing about 1031 exchanges is finding that similar property. Now you can just put that into a syndication, and it's less hassle from that point of view. That's kind of what it does.
Yeah, I like the point that baby boomers getting ready to just retire can just get out of a more active investment, just get into this. They got to trust the operator, obviously, and there's like multifamily, many different levels of operators that are good or bad, so they got to choose wisely. Anybody else have comments?
I don't.
Well, I just add that it's stupid to do that strategy anyway when you have a trust, but I've already talked about that. So
Yeah. You can bang that drum and talk for hours on it, right, Don?
Yeah.
All right. Why don't we take another break to hear from our sponsor?
It's me again, Antonio Holman, founder of United States Real Estate Investor and producer of This Month in Real Estate Investing. You know, one of the best ways to increase your company's brand awareness and increase warm leads is to create written content online. But as we know, content creation can be very time consuming and not very cost effective when having to pay professional copywriting fees. It's time to use REI content packs. REI Content Packs, done-for-you content packs give you the tools, flexibility, and cost-effective way to increase your brand's visibility and online presence without spending hours or even days stressing on what to create. REI Content Packs are a collection of high-quality, ready-made real estate blog articles exclusively created for the real estate investing industry. Can you imagine the possibilities if you could do 2 to 3 more deals per month without increasing your ad spend? REI Content Packs can help you do that. Can you imagine getting unlimited online traffic, increasing your Google ranking, getting more leads, and making more money? REI Content Packs can help you do that too. To get started increasing your brand's content and lessening your workload, head on over to thismonthinrealestateinvesting.com/REI Content Packs. That's thismonthinrealestateinvesting.com/REI Content Packs. It's time to get off the online marketing hamster wheel. Try REI Content Packs today at thismonthinrealestateinvesting.com/REI Content Packs. Now back to James and This Month in Real Estate Investing.
Okay, from Bloomberg, America's priciest neighborhoods are changing as the ultra-rich move to Florida.
we don't want them. Go.
They're coming. Miami's Star Island has drawn the rich for decades, but the Citadel hedge fund founder Ken Griffin's move from Chicago launched the neighborhood to a whole new level. Typical homes went from 23 million in 2018 to 40 million, making it the priciest neighborhood in America. Buyers like the warmer climate, relaxed COVID rules, economic policies, political policies, and no state income tax. One man said that the taxes he's not paying in Massachusetts is essentially paying for his new house in Florida. Even with this trend started during the pandemic, there are people talking about moving back to economic, political, and cultural centers like New York and San Francisco, but it's not stopping the flood. There's still a lot going there. And maybe they just want to hang out with you, Don.
Well, you know what? Here's a big fallacy about Florida and the state income tax. You don't have a state income tax here at all, okay? But you are feed to death. There are fees and fees and fees and fees and fees. I mean, like anything else, crunch the numbers. I mean, there's not significantly that much of a difference if you look at what you're actually paying. And a fee is a tax, okay? But I mean, I get that. People make emotional decisions. I think they don't necessarily have all the facts when they do that. They just hear, oh my gosh, I got to be in a state where there's no state income tax. It's like going to Texas, for example. It's like, yeah, no state income tax. Yeah, but when you have an ice storm or it gets a little bit of snow, then it's all a private electrical system, and you're going to start jumping from like $200 a month to $10,000. So yeah, there's no state income tax, but what else are you going to end up paying for? So as someone who's been in Florida for 25 years almost, it's like I don't get it what the attraction is per se, because actually our infrastructure is not very good at all. We have gridlock, but I guess if you got that kind of money, you don't care. I guess helicopter back and forth, but I just don't see it why they do it. But hey, you're right, it's not going to stop.
Yeah. Despite tax, money's got to come from somewhere.
Yeah,
nothing's for free, right?
Right.
I mean, it's just irrational, right? Prices have doubled in a lot of these markets and cities and areas in Florida in 2 years, 3 years. typically, if you look over the last 100 years, I think it takes 10 years for real estate to double. So I'm sitting here saying it's irrational, but what would make it come down if you've got such a limited supply? It's what I was saying earlier, kind of about nationwide real estate investing. You have such a limited supply and you have so many more ultra wealthy people. Is that neighborhood, are we going to ever wake up and have that neighborhood be worth $20 million again? Probably not, but I've been wrong before and I can be wrong again. I've been waiting. I want to move to Florida in the next 3 years when my daughter graduates from high school. And I just keep thinking, I'll just wait till it goes down. And I'm not sure it is going to go down because there's so many people moving there.
Well, I hate to bring up a political hot point here, but you have the deniers about climate change. You got people that see it, but be in Miami when it starts to rain. You see what happens with all the flooding. And that's just think people don't think about that, but that's an issue. And it's a ticking time bomb. And I don't know. I mean, all this stuff's going on here. The aquifer is losing. It's dropping, and you're getting more. You're going to get more sinkholes and more. There's a lot. And then we've seen hurricanes. I mean, it's not all ice cream and cookies here. So I don't know. But I guess you could talk about that anywhere. I mean, frick, you got Sandy came in and took out New Jersey. I don't know. I mean, you got the fires out west, and people still buying real estate like pancakes and and hotcakes in California. I don't know. It's just crazy. I don't know.
Yeah. Oh, Kim, you're muted.
Nope, still
muted. There we go.
Sorry, guys. I have an investment property in Florida, and so I can only speak to my experience. And I mean, there was a lot of demand when it went on the market. A lot of really qualified people that, were moving into that area. Mm-hmm. And so I can definitely say, just from my experience, it's a great place, from what I've seen on the investing side.
Where
so
in
I can
Florida
see
was
why.
That?
Port Charlotte.
I don't know where that is.
Yeah, it's just southwest Florida, Fort Myers, that area.
Mm-hmm.
Okay, gotcha.
Yeah.
I know that area.
Yeah. So I mean, I'm not doubting that it's all true. What you said is absolutely 100% true. I just doubt the reasoning behind it. But you're right. I mean, from a practical point of view, the demand is there, and it's a great place to invest right now. That's all. I agree with you 100%.
Yeah. You talk to people that are buried in snow in Tahoe and freezing their butts off in Minnesota. Yeah.
And then you can't wait for the garden days in Florida when it's 98 degrees and 92% humidity, and it's like, oh, we're just loving
I love it. I love that heat.
Yes.
Yeah, I'm from Michigan originally. I live in Georgia now, but I remember Florida being considered paradise, and still is to my family. They're like, oh, Florida's great. So I mean, they're definitely from Northerners. Florida's a really awesome spot.
Yeah. I don't know if I could handle it. I'm from Alaska. I like the cold. When it gets hot and muggy, I'm like, ah.
Yeah, it's not fun, but hey.
Everybody's got their thing, right?
Well, but the natural disaster waiting to happen here. I mean, people don't from the north. They come down here and they start realizing what it's like to be on the turnpike, a 2-lane highway, the Florida Turnpike, and you've got that 50 plus, 60 plus year old guy going 50 miles an hour in the left lane with his left hand blinker going. That's what they're coming down to. So be forewarned.
Yeah,
we're all over the place.
That's everywhere.
Is it?
Yeah.
Okay.
There's 50-year-olds driving like that everywhere.
I will not bend to the 59-year-olds here. I'm gonna drive normal.
Well, let's jump into the next article from Benzinga. Meet the platform fundamentally changing how we think about real estate investing. A company called Parcel, Parcl, launched a platform that uses the Solana blockchain technology and allows users to trade price movements of real estate on a geographical basis. Users can go long or short on the median home price and create a portfolio. Prices are sourced from the parcel price feed, which supplies the median price per square foot on a city or neighborhood level. There's no minimum investment, is highly liquid, and has low transaction costs. I'm still trying to get my head around this, and I don't really understand the stock version of that myself either. Does anybody else on here understand what they're doing?
I mean, it sounds like they're setting a price based on individual markets, right? And you can trade whether it's like shorting or a stock almost. So you can decide if it's going to go up or down. But I don't know. It doesn't seem like they're investing in the actual assets.
Yeah.
It's just like an index fund or something.
Yeah, that's what I was kind of wondering.
Yeah,
I wouldn't be investing.
Let that one shake out.
Yeah.
Yeah, my first thought reading this article is I thought, well, isn't this a little bit like gambling? Like what type of factors are people using to actually understand if, to short it or long it or however they're doing it? And then the other thought I had is if they really know the market area and can actually make a good strategic opinion about it, it almost was like, well, how is that different from insider trading? So I don't really know how they're doing it. And I'm just kind of saying those comments, tongue in cheek, but at the same time, crypto, I'm just way too old fashioned when it comes to real estate. I have to have something tangible. I have to be able to analyze it. I've got to be able to have 5 exit strategies. And this just seems completely different than what I'm used to.
Yep.
Yeah. Don't even talk to me about crypto. I'm out. I have no opinion except that I'm sorry. I don't. You're right. Kimberly, 100% right. There's got to be something concrete. And to me, it's just too much speculation. And I will not get it. And I get so many people up my butt about that saying, oh, you guys, it's like, no, stay away. Stay away. I'm not going to do it. Okay. Won't do it. That's it.
Yeah. I just went to a really interesting continuing education class on crypto, blockchain, NFTs, and I learned quite a bit. And I guess there's a lot of good things that blockchain is bringing to the industry. Crypto, on the other hand, you have to kind of separate that. That's, it's been given such a bad name from all the investing into it. That currency. We'll see how this platform shakes out. I definitely want to learn more about what they're doing, and may never do any investing in that, because I, like you, Kim, I want hard assets that I can analyze and control. I'm not the gambler. I looked into that stuff before, and I was like, I just don't have the personality for that, eliminating.
Bad for movies too. I mean, you're never going to have a scene where a crypto investor is going to throw all his crypto on a bed and just roll around on it and exult because he's so rich, and that doesn't pass the smell test for me. So
can't make it rain with crypto, can you?
No. You throw electrons. I don't know. Just
protons.
Nice. All right, let's jump into our next article from Investing Daily. Cannabis, a new high for real estate values. Love their creativity. So the presence of pot dealers used to be considered bad for neighborhoods, but has changed quite a bit. Survey of people new to a metro area showed that 46% said they'd rather live where it's legal, compared to only 22% that want to live where it's prohibited. The quote unquote green rush has actually revitalized communities, creating many new jobs and increased residential and commercial real estate prices. Real estate companies now specialize in dispensaries and warehouses. Law firms focus on changing laws, and investment firms are looking for opportunities in the space. And of course, politicians are motivated to push for legalization, especially as they see dollar signs with state and local tax revenue. I live in Colorado, where we've been in the headlines for years since legalization, and a lot of other states have studied what has happened over time. And as you can see, there's a lot of states jumping on board when they see how much money it's brought in. What have you guys seen in your markets? I'm not aware who's got legalization or not.
We operate in DC. It hasn't done anything. I think it all goes up in smoke when it becomes
good one.
When it becomes federally legalized, and the Philip Morris is just going to take over. Like, yeah. I mean, are they not pushing to get this legalized so they can, sell people more bad shit and make more money? So yeah, I don't think it hasn't affected DC real estate much at all, and it's just a matter of time before it becomes federally legalized and the big guys take over and all these places go away.
Yeah, that is one thing that when you looked at the numbers for Colorado, everybody thought, oh, there's all these people going to move in here and bump up the prices, and it really didn't have that much effect when we looked at the real numbers.
I don't see it happening that much in Florida. I mean, for me, the big breakthrough in Florida is going to be when they legalize meth. So I'm putting all my profits in the meth labs. Okay, I just say it out loud. Oh shit!
They legalized it in Portland, and it hasn't. The prices haven't spiked in Portland
for meth.
But I tell you what, it's great business for dentists. When the teeth start falling out, they're right there. So.
How do I follow that? But I kind of, I just have to make a comment if we're talking about our areas. So Georgia, it's not legalized, but there is a more CBD here. So I do see like a growing, economic, like I see, CBD houses, vape shops and things like that, that is supporting it. But from my understanding, it's not legal here yet.
Gotcha. All right. Hey, why don't we jump into our last fun news item from Money Talks News. 7 red flags of a freeloader. I'll just go through them here. And I kind of called out their potential solutions. So somebody says, I forgot my wallet. Possible solution: if habitual, call them out on it the next time. Can I borrow something? Just say no and shut up. Just don't even explain. Just say no. Can I stay with you? Set a very clear timeline and have them sign an agreement. They pointed out, if they stay too long, they actually may qualify as a tenant. You might have to evict them. So that could be a bad situation. You're so stingy, somebody says. If it's a roommate situation, set boundaries or move out after the lease ends. A lot of these were kind of talking about people renting and having roommates. Can you front me? Possible solution: ask why they can't pay and suggest creating a budget so it doesn't keep happening, or find a new roommate. Never pays you back. Possible solution: just say, hey, that's not in my budget. Has money for everything except what matters. Possible solution: don't lend them money and always ask for separate checks. Can you guys relate to any of these on either side?
I think you left one out.
Oh, did I?
Will you marry me?
Yeah. That's a big one.
Yeah, as being a landlord for all these years, as I was reading this article, I was thinking, the most common ones that I get are, number 1, are you a private landlord? And number 2, can I move in today? Those are always kind of little bit red flags of my experience over the years.
Interesting. I know that first one. I forgot my wallet. My brother used to do that all the time. Like, dude! And it's not like he was meant to be a freeloader. Like, he just forgot his wallet all the time. Okay, this is intentional now. It starts becoming so habitual. Anything else? All right. Well, guys, this has been awesome. I'd like to thank our sponsors, Jason Palliser's 2-day investment blueprint and REI content packs. Our guests, you guys have been awesome. Dohn Thornton, Kimberly Kesterke, and Brad Chandler. In that same order, why don't you guys let people know how they can connect with you?
Okay, yeah. If you see on the screen, just go to my page, Financial Freedom. Now, I guess I know about that. That's great. Or just Google me. I'm all over the place. On the short sale guy.
Awesome. And people can find me at thew2landlord.com. I also have a free Facebook group. It's Real Estate Investors with Full-Time Jobs. You can find me there as well.
I'm Brad Chandler, and you can find me at bradchandler.com/contact. And it has all my social media as well as a new cool group we just started, How to Be Happier for Entrepreneurs. If you're struggling with happiness or really anything in your life and want more happiness, reach out to me.
So I'd also like to thank our producer, Antonio Holman with United States Real Estate Investor. Follow and subscribe to This Month in Real Estate Investing on YouTube at youtube.com/@United States REI or your favorite podcast app. And remember, when one door closes, another door opens to financial freedom. Thanks, everybody.
Thank you.